I mean, this earnings season has been spectacular. 87% of the companies that reported have beaten expectations. The economic numbers we're getting, even slight headline misses, are like record numbers that we've never seen before. Is it all priced in? Is that why we're seeing such muted action?
It's hard to say that it's priced in maybe by Wall Street, but maybe it was priced in by the end investor. So like maybe the analysts, their numbers weren't high enough, but over on the buy side, people's internal numbers were high enough. And that's how you get a situation. Look at GM, for example, a stock which I'm long, having a nice day today, but really just rallying back to what it lost over the last couple of days on no news. This is a company that put up $2.25 in earnings per share versus $1.04. So I don't know how you price in an earnings beat of more than 100%. So if that's the story for why GM is not in the 60s yet, I guess it's somewhat plausible. I do think bigger picture, there's a dawning realization among financial professionals, investment professionals, that the Federal Reserve, regardless of what they say when they speak with the public, the Federal Reserve is inappropriately still buying $40 billion worth of mortgage bonds every month and $80 billion worth of treasuries. There's absolutely no justification whatsoever for that kind of behavior. The better the numbers get on everything from employment to industrial production to housing, the more ridiculous it's going to look. So these 2023 taper calls, I would relax with that. I would say they're going to start hinting at tapering this summer, and they're going to have to start tapering before this year is over. It makes absolutely no sense why anyone's expectations would be that this Fed will continue to spend $120 billion every month buying the areas that are the most overheated. Is there any slack in demand for Treasury bonds in real life? No, of course not, Sarah. Wilf, is there any reason for us to think that this housing market needs to continue to be stimulated when we just had more existing homes sold in the year 2020 than any prior year outside of 2006, which was the pinnacle of the last housing bubble? Everybody knows this. Everybody's starting to price it in. So if you ask me what's up with these lackluster responses to great earnings, I think it's because people know the taper is coming sooner than what the Fed is saying.
Shepard Smith here. Thanks for watching CNBC on YouTube.